What if I told you that the biggest silver rally in years may be forming right now while most investors are looking the other way? What if the headlines you are reading today are hiding the real story behind what is happening in the silver market? History has shown that some of the most explosive silver rallies begin when confidence is low and almost nobody expects prices to move higher. Right now, several powerful forces are quietly lining up at the same time. Industrial demand is reaching new highs. Global supply is struggling to keep up. Central banks continue reshaping the financial landscape. The Federal Reserve is entering another critical phase, and smart money appears to be preparing for something much bigger. Stay with me because by the end of this video, you will understand why many analysts believe silver could be approaching one of its strongest breakouts in decades, and why the truth behind this story is something very few people are talking about. Silver has always been one of the most fascinating assets in the financial world. Unlike gold, which is mainly seen as a store of value, silver plays two important roles at the same time. It is both a precious metal and an industrial metal. That unique combination means silver reacts not only to investor sentiment but also to changes in manufacturing technology, clean energy, and global economic growth. For many years, silver traded quietly while most attention focused on stocks, cryptocurrencies, and artificial intelligence companies. Investors searching for quick gains often ignored precious metals, believing that traditional assets had lost their importance. Yet beneath the surface, something very different was taking place. Physical silver inventories have gradually tightened. Industrial demand has continued rising year after year. Mining companies have faced growing challenges, increasing production. Governments around the world have accelerated investments into renewable energy, electric vehicles, and advanced electronics. Every one of these industries requires significant amounts of silver. This growing demand creates a simple economic reality. When demand rises faster than supply, prices eventually respond. Sometimes that response is slow. Sometimes it arrives suddenly. Throughout history, silver has demonstrated that long periods of quiet trading can be followed by dramatic price movements that surprise almost everyone. Many investors ask why silver has not already exploded higher if demand is so strong. The answer is more complicated than most headlines suggest. Financial markets rarely move based on one factor alone. Short-term price movements often reflect investor emotion, interest rate expectations, currency, strength, hedge fund positioning, and broader market sentiment rather than immediate supply shortages. Over the past few years, the strong US dollar has placed pressure on many commodities, including silver. Since silver is priced globally in dollars, a stronger currency makes the metal more expensive for international buyers. That naturally reduces some buying pressure and limits price gains. At the same time, aggressive Federal Reserve interest rate increases changed investor behavior. Higher interest rates made Treasury securities and cash more attractive compared to non-yielding assets such as precious metals. Many institutional investors shifted capital toward higher-yielding investments while waiting for inflation to cool. But markets never stay in one cycle forever. Today, the conversation is changing. Inflation has slowed compared with its highest levels, but remains above long-term central bank targets in many parts of the world. Economic growth is showing signs of slowing. Manufacturing data has weakened in several major economies, while labor markets continue showing mixed signals. This creates a difficult balancing act for policymakers. If interest rates remain too high for too long, economic growth could weaken further. If rates fall too quickly, inflation risks returning. Every Federal Reserve meeting now carries enormous importance because investors understand that even small policy changes can reshape global financial markets. Silver has historically performed well during periods when investors begin expecting lower interest rates. Why does this happen? Lower rates generally reduce borrowing costs, weaken the dollar over time, and improve the appeal of precious metals. Investors seeking protection against uncertainty often rotate into hard assets, including both gold and silver. This is one reason many experienced market analysts are watching every inflation report, every employment release, and every Federal Reserve statement with extraordinary attention. Another major factor receiving far less public discussion is central bank behavior. While central banks primarily purchase gold rather than silver, their actions send an important message about confidence in the global monetary system. Over recent years, central bank gold purchases have reached historically strong levels. Countries across Asia, the Middle East, and emerging markets have steadily increased precious metal reserves. Why would governments continue accumulating gold at record levels? Many experts believe it reflects growing concerns about long-term currency stability, geopolitical uncertainty, and diversification away from traditional reserve assets. Although silver is rarely included in official reserves, the increased global focus on precious metals creates broader investor awareness across the entire sector. History shows that when gold begins attracting institutional demand, silver often follows with even greater percentage gains because the silver market is much smaller. That smaller market creates another important point. It takes significantly less investment capital to move silver prices compared with gold. When institutional investors, pension funds, hedge funds, exchange-traded funds, and retail buyers begin purchasing silver simultaneously, available supply can tighten rapidly. This limited market size has produced some of the largest commodity rallies ever recorded. Many longtime investors remember previous silver bull markets when prices moved far faster than most analysts predicted. While no market follows exactly the same path, history reminds investors that silver has repeatedly demonstrated extraordinary upside potential once momentum builds. Another reason silver continues attracting attention is its expanding industrial importance. Unlike decades ago, modern technology depends heavily on silver because of its exceptional electrical conductivity, thermal efficiency, and durability. Solar panels require silver. Electric vehicles require silver. Advanced medical equipment requires silver. Consumer electronics require silver. Artificial intelligence infrastructure depends on high-performance electronics that also use silver components. As the global economy becomes increasingly digital, industrial demand continues expanding regardless of short-term investor sentiment. This creates an interesting situation. Even during periods when financial investors temporarily reduce silver exposure, manufacturers continue consuming large quantities simply because production requires it. That underlying industrial demand creates a stronger long-term foundation than existed during previous market cycles. Now consider mining supply. Developing a new silver mine requires years of exploration, environmental approvals, financing, construction, and production. Mining output cannot suddenly double because prices rise. Even if companies decide today to expand production, new supply may not reach markets for many years. That delay means supply often responds much slower than demand. Economists call this structural imbalance. When long-term demand consistently grows while supply remains constrained, prices eventually adjust higher to encourage additional production. Many analysts believe silver may now be approaching exactly that type of environment. The interesting part is that most daily financial headlines rarely focus on these long-term fundamentals. Instead, news coverage often concentrates on short-term price fluctuations, temporary market corrections, or daily political developments. Successful long-term investors frequently pay closer attention to structural trends than daily headlines, because those deeper trends usually determine where markets eventually move over the coming years. And right now, several structural trends appear to be strengthening simultaneously. The question is not whether volatility will continue, because every financial market experiences volatility. The real question is whether today's underlying conditions resemble the beginning of previous major silver bull markets more than the average investor realizes. In the next part, we will examine the powerful global forces quietly building behind silver demand, and why some of the world's biggest financial institutions are watching this market more closely than ever before. Even though industrial demand has become one of the strongest long-term drivers for silver, many investors still focus only on short-term price charts. That creates an opportunity because markets often reward those who understand the bigger picture before the crowd catches on. Take the renewable energy sector as an example. Governments across North America, Europe, Asia, and the Middle East continue investing billions of dollars into clean energy projects. Solar power remains one of the fastest-growing sources of electricity around the world. Every new solar installation requires silver because of its unmatched electrical conductivity. Although manufacturers constantly search for ways to reduce the amount of silver used in each panel, total demand continues rising because the number of panels being installed grows even faster. This means overall silver consumption from the solar industry continues climbing despite ongoing improvements in manufacturing efficiency. The same trend is visible in electric vehicles. Modern electric cars require significantly more silver than traditional gasoline-powered vehicles. Silver is used in battery management systems, electrical connections, charging infrastructure sensors, and advanced electronic components. As governments encourage cleaner transportation and automobile companies expand electric vehicle production, silver demand naturally increases alongside them. Artificial intelligence is creating another unexpected source of silver demand. Most people think about software when they hear the words artificial intelligence, but AI depends on enormous physical infrastructure. Massive data centers require advanced processors, networking equipment, cooling systems, and high-performance electrical components. Many of these systems contain silver because reliability and conductivity are critical. As technology companies continue investing hundreds of billions of dollars into AI infrastructure, the indirect demand for silver also continues growing. Then there is the semiconductor industry. Computer chips power smartphones, medical devices, industrial equipment, military technology, communication systems, and countless consumer products. Silver remains an important material throughout advanced electronics manufacturing. This creates another layer of long-term industrial demand that did not exist on the same scale several decades ago. When investors combine solar energy, electric vehicles, artificial intelligence, electronics, aerospace, defense, medical technology, and telecommunications, the total picture becomes much larger than many realize. Demand is no longer driven by one industry. It is being supported by multiple global industries expanding at the same time. Now compare that demand with supply. Global silver mining has struggled to increase production rapidly. Many of the world's largest silver mines are aging. Ore grades have gradually declined in several regions, meaning miners must process more material to produce the same amount of silver. Operating costs have increased because of higher energy prices, labor expenses, environmental regulations, and equipment costs. Political uncertainty has also complicated mining operations in some producing countries. Permitting delays, infrastructure challenges, and changing government policies can slow new mining projects for years. Even when silver prices rise, mining companies cannot immediately solve these issues. Supply remains relatively fixed over the short term. This imbalance between growing demand and constrained production has attracted increasing attention from commodity analysts. Several industry reports have highlighted recurring physical silver deficits where annual industrial and investment demand exceeds newly mined supply. These deficits do not necessarily create immediate price spikes because above-ground inventories can temporarily fill the gap. However, inventories are not unlimited. As stockpiles gradually decline, the market becomes increasingly sensitive to unexpected increases in demand. That is exactly why experienced commodity investors closely monitor inventory levels rather than focusing only on daily prices. Another factor receiving renewed attention involves exchange-traded funds and institutional investment flows. When large investment funds increase silver exposure, they often purchase significant amounts of physical metal or financial products backed by silver. Because the silver market is relatively small compared with stocks, bonds, or gold, even modest institutional buying can have an outsized impact on prices. History has demonstrated this several times. Periods of accelerating investment demand have often coincided with some of the fastest silver rallies on record. Retail investors also play an important role. Unlike many commodities, silver remains affordable for individual investors compared with gold. Someone who cannot afford large amounts of gold may still purchase physical silver coins, bars, or silver-backed investment products. That broader accessibility means retail demand can increase rapidly during periods of economic uncertainty. Confidence also influences precious metals more than many realize. Whenever investors begin questioning government debt, rising deficits, banking stability, or long-term purchasing power, hard assets often receive increased attention. Silver benefits from both investment demand and industrial demand simultaneously. That combination creates a unique market dynamic. Geopolitical uncertainty adds another layer. International conflicts, trade disputes, sanctions, shipping disruptions, and regional instability can all influence commodity markets. Even when silver production itself remains stable, transportation, refining, and global distribution networks may experience temporary disruptions. Markets dislike uncertainty. When uncertainty rises, investors often seek assets with long histories of preserving value. While gold usually receives the first wave of attention, silver often follows shortly afterward. Some analysts even describe silver as a leveraged version of gold because historically its percentage moves have frequently exceeded gold during major bull markets. Of course, that also means silver can experience larger corrections during periods of market stress. Volatility is part of the silver story, but long-term investors generally focus more on fundamentals than short-term swings. The US dollar remains another critical variable. If the Federal Reserve gradually shifts toward lower interest rates while inflation remains above historical averages, the dollar could lose some strength over time. A weaker dollar has historically supported commodity prices, including precious metals. No relationship remains perfect forever, but the connection between dollar weakness and stronger silver prices has appeared repeatedly throughout history. Investors are also watching labor market data, manufacturing surveys, consumer spending, inflation reports, and economic growth numbers because each release influences expectations about future Federal Reserve policy. Sometimes markets move more based on expectations than actual decisions. If investors become convinced rate cuts are approaching, capital often begins flowing before central banks officially act. That anticipation alone can reshape precious metals markets. Technical analysts have also noticed important long-term chart patterns developing over recent years. Without focusing on specific price targets, many believe silver has spent considerable time building a broad consolidation. Extended consolidation periods often store energy. When major resistance levels eventually break, new buyers frequently enter the market while short sellers rush to close positions. That combination can accelerate upward momentum. Of course, technical analysis should never be viewed in isolation. The strongest market trends usually occur when technical signals align with improving fundamentals. Today, many analysts argue exactly that situation may be developing. Strong industrial demand, limited mine supply, potential monetary policy shifts, persistent geopolitical uncertainty, growing technology investment, renewable energy expansion, and increasing long-term interest in hard assets. Individually, each factor matters. Together, they create a far more compelling picture than many investors recognize. The biggest mistake investors often make is assuming markets will clearly announce the beginning of a new bull cycle. History rarely works that way. Major trends usually begin quietly. Only after prices have already moved significantly do headlines suddenly declare that a new bull market has arrived. By then, early investors have often positioned themselves well ahead of the crowd. That does not guarantee immediate gains because every market experiences setbacks, corrections, and unexpected surprises. But understanding the underlying drivers allows investors to make more informed decisions rather than reacting emotionally to daily price movements. In the final part, we will explore what could happen if these trends continue strengthening and why many experienced investors believe the next chapter for silver may look very different from the last few years. The biggest question every investor wants answered is simple: what happens next? No one can predict future prices with certainty. Financial markets are influenced by countless variables that change every day. Unexpected economic reports, political events, natural disasters, technological breakthroughs, and central bank decisions can all shift market direction. However, investors do not need perfect predictions to recognize favorable, long-term conditions. They only need to understand probabilities. Today, many of those probabilities appear more supportive for silver than they have been in several years. Imagine a market where industrial demand continues reaching new records. Imagine mining production struggling to expand fast enough. Imagine inflation remaining above historical averages. Imagine interest rates gradually moving lower over time. Imagine the US dollar losing some of its recent strength. Imagine investors becoming increasingly concerned about government debt, geopolitical uncertainty, and financial market volatility. Each one of those developments individually could support silver. Together, they would create one of the strongest long-term environments the metal has experienced in decades. That is why many experienced investors are paying closer attention today than they did only a few years ago. Another important point often overlooked involves psychology. Markets are driven by human behavior just as much as economic fundamentals. During major bull markets, many investors wait for confirmation before buying. Unfortunately, confirmation usually arrives after prices have already moved substantially higher. Then fear of missing out begins replacing skepticism. More buyers enter. Momentum accelerates, media coverage increases, public interest returns. Only then does the average investor begin believing the opportunity is real. History has repeated this pattern across stocks, commodities, housing, cryptocurrencies, and precious metals. Silver has followed similar cycles many times. Early stages often feel quiet. Middle stages attract professional investors. Late stages attract widespread public excitement. Understanding this cycle helps explain why today's market may appear confusing. Prices do not always reflect long-term fundamentals immediately. Sometimes markets spend months building a foundation before making decisive moves. Patience becomes one of the greatest advantages an investor can have. Risk management also remains essential. Silver can experience sharp price swings even during long-term bull markets. Temporary corrections should never surprise investors. Volatility is part of the journey. Successful long-term investors typically avoid making emotional decisions based solely on daily headlines. Instead, they focus on long-term trends, supply and demand, economic conditions, and disciplined investment strategies. Diversification remains another important principle. Every investment carries risk. Silver may offer exciting opportunities, but it should always fit within a balanced financial plan based on individual goals, time horizons, and personal risk tolerance. No single asset should determine an investor's entire financial future. At the same time, ignoring silver completely could mean overlooking one of the most interesting opportunities developing across global commodity markets. The world is changing rapidly. Artificial intelligence continues expanding. Renewable energy projects continue growing. Electric vehicle production continues increasing. Advanced manufacturing continues evolving. Digital infrastructure continues requiring enormous amounts of high-performance materials. Silver remains essential to all of these trends. Unlike many fashionable investments, silver combines thousands of years of monetary history with critical importance for the technologies shaping tomorrow's economy. Very few assets possess both qualities at the same time. That unique position makes silver different from almost every other commodity. Gold remains the traditional safe haven. Silver offers both monetary value and industrial necessity. This dual role creates opportunities that many investors are only beginning to appreciate. The Federal Reserve will continue influencing markets through future policy decisions. Inflation reports will remain important. Employment numbers will continue moving markets. The U.S. dollar will remain closely watched. Global geopolitical developments will continue creating uncertainty. Mining production will continue facing structural challenges. Industrial demand will likely continue expanding alongside technological innovation. Every one of these factors deserves attention because together they shape the future direction of silver. Whether prices move gradually or experience a sudden breakout, no one knows. But the foundation supporting silver today appears significantly stronger than many people realize. That is the truth many headlines fail to explain. Markets often focus on today's price while ignoring tomorrow's forces. Long-term investors try to understand both. If history teaches us anything, it is that some of the biggest investment opportunities appear long before they become obvious. Silver has surprised markets before. It could do so again. The coming months will likely provide important clues as economic data evolves, central bank policy changes, and global demand continues developing. Watching these trends carefully may prove far more valuable than reacting to every short-term market swing. This is why so many analysts believe the next major chapter for silver has not been written yet. It may only be getting started. If you found this analysis helpful, make sure you support the channel by hitting the like button and subscribing to Silver and Gold Watch for more weekly updates on gold-silver inflation, the Federal Reserve global markets, and precious metals investing. I also want to hear your opinion. Do you believe silver is preparing for a historic breakout, or do you think the market still has more time before the next major rally begins? Share your thoughts in the comments because your perspective helps create better discussions for everyone following the precious metals market. Thank you for watching, and I will see you in the next video.